We have Apple shedding more than $100 billion in market cap at the market open today after the president threatened a 25% tariff on Apple if it doesn't make iPhones in the United States. Apple is obviously down year to date at the moment. How are you thinking about Apple? Is it still investable?
I do believe it is, Madison. I mean, it was our largest holding for many years, and then as it continued to depreciate, we sold it down. And so we have what we would consider a minimum position of about 2%. And that's largely because I think we're waiting to see what's important to us is what they're going to do with AI. And so we think there's better places to be adding to at this particular point. But I will say this, I think this is silliness. I mean, this is what we call industrial policy, but usually industrial policy comes with incentives. And so, governing the private sector via Truth Social feels really uncomfortable to me. And I think if the shoe were on the other foot and someone told President Trump he couldn't build golf courses in Scotland, I think he would have a very different view of the situation. It is ridiculous to think that Apple can move all of their manufacturing back to the United States. It's also ridiculous to think that consumers are willing to pay the $3,000 to $5,000 estimates for an iPhone if they are built in the United States.
Since the Trump administration exempted laptops, smartphones, and certain other consumer electronics from reciprocal duties imposed in early April, Apple's imports into the United States have so far avoided being negatively impacted. On Friday, Apple's stock fell 3% to about $195, losing territory for the 9th straight day. Since the beginning of 2025, the stock has lost 22% of its value, greatly underperforming its Magnificent Seven peers. This is because the company's substantial exposure to tariffs has caused sentiment toward it to deteriorate. Below, we examine Apple's chart in more detail and apply technical analysis to pinpoint key price levels that are worth keeping an eye on. Apple shares have been trending lower within a descending, expanding formation since hitting their record high in late December. The price has repeatedly tagged the pattern's upper and lower trend lines. More recently, the relative strength index dropped below its neutral threshold, indicating waning price momentum, and the stock encountered selling pressure close to the pattern's upper trend line and 50-day moving average. It is also important to note that in early April, the 50-day MA formed a death cross, a chart signal that suggests additional falls, by crossing below the 200-day MA. Let's highlight the key levels of support and resistance on Apple's chart that investors should be keeping an eye on. The shares may first drop to about $193 if they continue to decline from their current levels. This month's low, which roughly corresponds with a brief consolidation phase that developed on the chart in the latter part of May of last year, may provide support for the price. A retest of lower support at $169 is possible because the bulls were unable to properly defend this level. Before the final May stock gap above the 200-day MA, investors may look for buy and hold entry positions in this area close to April's notable bottom and a brief period of sideways drift. The price of the stock may initially rise toward $215 during upswings, near a trend line that connects a series of matching peaks and troughs on the chart dating back to June of last year. This region might offer overhead selling pressure. Lastly, an increase to about $237 could be fueled by a more optimistic rise in Apple shares. The area where significant peaks formed on the chart last July and October may be where investors who purchased at lower levels choose to lock in profits. So, what implications does this have for Apple's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Apple stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
Nilay, every major technology has a profitable consumer product that defined it. We don't have that yet for AI. Does Apple have a better than average chance still of figuring it out?
I would argue that every big profitable consumer technology has a distribution associated with it. And Apple still has that advantage. All of these apps run on the iPhone. ChatGPT is expressed to people through an app on the iPhone. So Apple has the big advantage right now. I think the long-term view is, well, Johnny Ive is going to join OpenAI and they're going to build a new hardware device and maybe remove that distribution advantage. And if they get there first, if they can make the AI compelling enough for people to buy something other than an iPhone, well, Apple's got a race to make the AI built into the iPhone equally compelling. And I really don't know if they can do that at this moment in time.
I mean, how much are these tariffs an issue when we're thinking longer term about the questions about Apple's innovation viability? I mean, if they hit Apple and they hit Samsung, there's nobody who's building smartphones in the U.S. right now, and arguably, well, not just arguably, it's true, nobody as profitable as Apple. So does a sinking tide lower all boats?
Well, that's a nice way to define it. Sinking tide, lowering all boats. Listen, tariffs are going to be a lot of headache. I think the biggest issue you have with Apple or anyone else that's making a hardware product is, the heightened uncertainty that you're causing to the whole ecosystem, right? Mathematically, it's fairly straightforward. It costs about $600 to make an iPhone, give or take. You put a 25% tariff, you might have to pay an extra $150. That is still cheaper, I think, to pay that 25% tariff than actually trying to do the human lift of shifting not just assembly to the U.S., which maybe by some process you could, but really moving the entire supply chain is where I think you end up with a lot of bottlenecks over here, right? And if you're Apple, I think the math might still be favorable with saying, I'll just pay the 25% tariff, ideally nothing, but I'll pay the 25% tariff, versus trying to shift the entire production and supply chain base to the U.S.
Right. Nilay, Johnny Ive at Apple, and now at OpenAI. I guess there's the idea that that's potentially a game changer, that when you get the right person who used to be at Apple, you've got a challenger. But I remember when, John Rubinstein went to Palm, we've had numerous Apple veterans going other places, and they didn't come up with exactly the same kind of magic, at least from an investor perspective, that Apple had. Is this different?
It is, but I just want to say I spent the entire first Trump administration covering the promised Foxconn plant in my hometown of Mount Pleasant, Wisconsin. It's 2 minutes from the house I grew up in. It's not there. That land is a Microsoft data center now. It's never going to happen. And the carriers will actually eat the 25% cost and pass that on to your wireless bills. That's what's going to happen to the iPhone. Johnny Ive at OpenAI, the really interesting thing is all of Ive's great products with Steve Jobs were built on core technical innovations and often user interface innovations. The iPod was the click wheel and the little Toshiba hard drive that John Rubinstein loves to take credit for finding, actually. The iPhone was the multi-touch screen. The iMac itself was the web, right? That was what made people buy an iMac instead of a Windows PC, was the web browser existed. And that core technological innovation was going to drive all these products forward. AI might be that thing, right? The fact that you can just talk to a computer and it can talk back to you is a very powerful user interface idea. We've seen so much excitement be driven around it. I'm not sure at OpenAI that it works all the way to build a new product around it. It feels like maybe Johnny Ive thinks so. He certainly got paid a lot to say he thinks so. Sam Altman has to think so. He's raised a lot of money and he's got to deliver a company as big as Apple to pay back that investment. Mm-hmm. But all of us can see right now that the technology is a little brittle. It's incomplete. So if you made an iPod that doesn't always play music, or an iPhone that sometimes lies to you, you would have a problem. And okay. I don't know how Ive is going to overcome that problem with design.
Indeed. Amit, last word to you. What do you have to believe to think that Apple's dead money here?
For you to believe Apple's dead money, I think the worry people have is Apple simplistically re-rated on three things in the last 5 years: gross margins, services growing, and buybacks. If you're net bearish, you could sit and say gross margins may not improve with all the tariff issues. Services could stagnate right now with all the lawsuits between that Google has and Apple versus Epic. You undermine two of the 3 bullet points you had on a bull case. I think that's the worry people have right now. We think innovation is alive. We think the ecosystem is undervalued right now that Apple presents.
The tariffs that President Donald Trump threatened to impose on Apple Inc. early Friday would also target a larger group of gadget manufacturers, such as Samsung Electronics Co., in an effort to encourage them to shift their production to the United States. When questioned at the White House if his tariff threat would solely affect Apple, Trump responded, "It would be more. It wouldn't be fair if it weren't for Samsung and any other manufacturer of that product." Trump gave little further information, but he did say that the import taxes would be properly completed and prepared for effect by the end of June. The president's comments clarified his earlier in the day social media statement, in which he threatened to impose 25% tariffs on Apple if the business did not move its renowned iPhone manufacture from abroad to the U.S. According to a U.S. official, the warning was issued just days after Trump and Apple CEO Tim Cook met at the White House on Tuesday. He declared his intention to develop plants in India. Going to India is fine, but you won't sell here without tariffs, in my opinion. That's the way it is, Trump stated. During trading in New York, Apple's shares fell 3%. The wider market was impacted by Trump's separate threat on Friday of imposing a 50% tax on the European Union that would take effect on June 1st. Apple and Samsung, based in South Korea, face a serious challenge from Trump's desire for U.S.-based manufacturing, as their gadget supply networks have long been centered in Asia. The U.S. lacks the extensive network of manufacturers, suppliers, and engineering expertise that are currently exclusive to the region. Apple personnel did not immediately respond to requests for comment. Alphabet Inc., whose Android software powers Samsung smartphones, and Samsung declined to comment. After Apple hinted earlier this month that new tariffs might result in up to $900 million in greater costs in the current quarter, Trump issued his warning on Friday. Apple had already intended to move the majority of its iPhone production going to the U.S. to facilities in India in order to lessen the impact of import taxes on goods made in China. This decision had enraged Trump more and more. Trump claimed to have urged Cook to cease constructing plants in India to produce devices for the U.S. during his trip to the Middle East last week, pressuring the iPhone manufacturer to increase local production as it shifts its focus away from China. To stay informed about the latest developments from Apple and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Apple stock, so please share your opinions in the comments below. Now, let's dive into today's video.
New development late day. So here we go again. What do you make of it?
Well, it's really bad for Apple. I mean, if these tariffs go into action, then what you're going to see is Apple's either going to have to do a price increase on the phones, or it's going to have to maybe roll back some of that buyback it planned, or try to rethink its dividend. Those are the three areas that you end up looking to try to get the relief here. And if it's an increase in price on the phone, we know that the services part of Apple's business is what's driving this stock. And services to grow needs users, which means that Apple needs those customers. And that's why Apple has been reticent to raise the price on these phones, because it knows the thing that's driving its valuation isn't necessarily iPhone sales, although those are important. It is the fact that people are using its services, and that area is growing, and investors are looking at that and adding a multiple or applying a multiple to it. So if you see a big increase, I don't think Apple's going to bring the phone back here, but that tariff could end up increasing the price of the phone. That is going to make the company struggle in its attempt to grow that services business, and we could end up seeing some serious negative consequences because of it.
You make a great point. A point that was discussed today on the halftime report as to whether the stock was expensive or not. It's much more expensive than it was 10 years ago based on valuation, right? Even with this mountain of cash that they are sitting on, it's about 27 times. What you're telling our viewers is the reason that some are willing to pay up to a higher multiple is because all of these expectations around the services business, which is a Fortune 50 company all by itself.
Exactly. And so this is a threat to it. And by the way, it's not the only threat. We also know that the money that's coming in from Google to be the default search on iPhones, that's at risk because of regulatory action. We also know that the fees that Apple collects in the App Store, those are at risk because now there's a chance that Apple might not be able to prevent app developers from telling people that they can go elsewhere and get the subscription cheaper, right? There's been policies within the App Store that has been impossible, and there's other regulatory effects that might take impact. So when you think about this service business, which again has been driving the stock, you now have the threat from tariffs, the threat from regulation, and the potential loss of that Google money. And now Apple will probably be able to get past a number of these issues. But to expect them to become entirely unscathed after such a situation is a lot. So again, still up for debate. We're going to see what's going to happen. But it's a lot of challenges at once for this company, not to mention the challenges that it faces with AI.
Lastly, what about the relationship here between Tim Cook and President Trump? We had made the point over and over again at the beginning of Trump 2.0 and his new administration, how deftly Tim Cook had managed that relationship. He had managed to stay out of the crosshairs at a time where many of his contemporaries within big tech had not. And here we find that Tim Cook is back in the crosshairs and in a very big and recurring way. What do you make of that?
Absolutely. Well, look, Apple, again, nearly a $3 trillion company. It probably was when they were talking. Now it's just below. And the amount of jobs that you would expect from a $3 trillion company, if you're kind of thinking old school and not in a technology way, is massive. But a lot of the jobs that are involved in manufacturing these phones are elsewhere. So it seems like Tim Cook is going to have to bring some jobs to the United States one way or another to be able to appease Trump. Now, I'm just speculating here, but I imagine that when Tim Cook met with Trump, Trump said, we need you to bring jobs to the U.S., Tim Cook probably said, okay, yeah, we're going to do that, Mr. President. And then, he sees that the manufacturing has moved to India instead of China, and that's led to this blow up. So I would imagine that for this to blow over, Tim Cook is going to have to basically make a concession to Trump. Maybe it's just, ceremonial 2,000 or 3,000 jobs that come in for manufacturing, or they put the final stamp on the package and they say, okay, this has been assembled or completed in the United States. But he's going to have to do something, because I think you're right. There's got to be something wrong with this relationship for Trump to, not just now, but repeatedly hit Cook. He hit him in Saudi Arabia. He's again talking about tariffs. It doesn't seem like things are as hunky-dory as they were in the first term. And if you are an Apple shareholder, or if you're worried about the future of Apple, Tim Cook's ability to be this epic diplomat has been one of the things that has given you faith in the company's ability to sustain its success. And now we have some questions. So I think Cook will probably be able to find some way to ride it out. There are concessions to give, but ultimately this is not exactly the position you want to be in if you're him or if you're a shareholder.
Regarding his talk with Tim Cook yesterday, Trump stated, "I had a little problem with him. He is constructing throughout India. You shouldn't construct in India, in my opinion. A new server manufacturing plant in Houston, a supplier academy in Michigan, and more spending with its current U.S. suppliers are all part of Apple's $500 billion investment in the U.S. over the next 4 years," the company said earlier this year. However, that falls short of Trump's full-scale transition to U.S.-based production. For Cupertino, California-based Apple, moving production of its iconic iPhone and other gadgets to the U.S. would be a massive and costly project. Trump cautioned businesses against charging their customers for tariffs during his address on Friday. He told reporters in the Oval Office, "I don't want the consumer to pay." For yet, Trump's so-called reciprocal tariffs on items from almost all U.S. trading partners do not apply to smartphones, computers, and many other devices. However, given that the Trump administration is considering sector-wide taxes on chips that might impact a wide range of gadgets, that exclusion might not last long. The timing of tariffs connected to chips is still up in the air, and it's unclear if Trump was alluding to those discussions on Friday. According to a letter from Brandon Nispel, an analyst at KeyBanc Capital Markets, this is a glaring negative. With the release of the iPhone 17, Apple will probably have to increase the price of its iPhones, but it probably suggests a bigger impact on the gross margin in the short run. According to Bloomberg Intelligence, the adjustment may reduce Apple's gross margin by 3 to 3.5 percentage points in fiscal 2026. Paying the levy would still be significantly less expensive than shifting iPhone production to the U.S. And according to analysts, phones built in the U.S. might eventually cost thousands of dollars each. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Trump raising the stakes on trade this morning with two targets in mind, the EU and Apple. The president saying the EU has been very difficult to deal with when it comes to trade. So he is calling for a 50% tariff effective on June 1st. Treasury Secretary Bessent says he hopes that this will light a fire under them. And when it comes to Apple, Trump is calling for a 25% tariff on products that are not fully made in the United States. This is sending shares of the big tech company lower today. And when all this news came out, the futures were down and now the markets are down as well. So Wall Street is in this sell-off mode. There are heightened trade tensions out there. And Taylor, I'll come to you first to start on Apple. Take your pick, or the EU, but we can start with Apple. 25%. The president is saying if the phone is sold in this country, I want it to be made in this country. No other country, not even outside of China, is going to do.
So this was funny because a few weeks ago, we were having this debate if Trump was just anti-China and anywhere else would be fine, or if he was very much just pro-U.S. and a shift from China to any other surrounding Southeast country was going to work. we are now, I think, getting very clear understanding that it is pro-USA. It's not just no China. It is nothing else in that region, and we want it to be here. I know we have lots of free traders on this program, so I'm really excited for this debate. My concern is what happens when countries like China don't play fair, and then what, right? And we're starting to see that with Apple. You're taking a look, you're down 2.5%. Now, is this an overreaction? Is it not? Is this an opening negotiation? I think all of that remains to be seen. I don't know if anyone actually knows what the real impact will be. We've read analyst reports that say Apple could take 5 to 10 years to move manufacturing to the U.S. The iPhone could go up $300. Your iPhone could be $3,500. So we're trying to figure out a scenario of what happens. A lot of people think Apple's sitting on, and David Bahnsen knows this better than I do, $200 billion in cash. Could they use that to buy up land the way they have in China, where they have literally many cities where they're making iPhones and they have dorms and schools and everything there? Could they do that here? Again, that is not happening in the next 3 years. So I think people are just trying to figure out, for companies like these, do they eat the cost? Do they pass it on? And what's the real timeline? What does that look like?
And the second thing he talked about this morning, Dagan, was this EU issue, saying it's been difficult to negotiate. So he's back to that 50%, sort of draconian tariff, I would call it. It's a significant tariff. And he's basically saying, if you don't come to the table to negotiate, EU, then you're going to have to deal with that, and quite quickly.
This is similar to what the president did on Liberation Day. You have noticeably extreme tariff, and he's laying it out there. You need to come with better offers and better negotiating. And the point is all of the EU countries have their own national interests in mind. The French want to protect their wine. The Italians want to protect their truffles. And these are some of the items, and seriously, that there are the highest tariffs on in terms of import tariffs from the United States. But on Apple, President Trump, this is also a negotiation in my mind. Apple has not committed enough money to the United States. It was it was $500 billion earlier this year. Apple got a major exception, a major exemption from the Trump administration that was filed with the customs on a Friday night,
right,
where they got a waiver on all of the import tariffs except the 20% tariff because of fentanyl coming out of China. This is before any of the other waivers. So he has done, the president, Apple an immense favor. Apple, in turn, was largely responsible for giving China rise to power by the network of 1,000 suppliers in China that Tim Cook set up. So Tim needs to play better ball with what is going on in these negotiations with reshoring and onshoring. Again, it's tariff revenue, 10%, and then onshoring, reshoring, manufacturing and jobs. And I said this before, Apple ought to be real careful where they are right now because of the recent ruling from a judge that found that Apple and Tim Cook, the CEO, directed employees based on this judge to defy a court injunction from 2021 that was related to Epic Games, and that there is one employee in particular who's been referred to the Department of Justice, to the U.S. Attorney in Northern California, to be investigated for potential criminal contempt charges. This is all related to the App Store, which is essentially it's a monopoly. Apple's got absolute control with capricious rules. There's no transparency about the approval process, and it's completely opaque. Apple was charging it's related to payments made. The Epic Games sued to get payments that were outside of the Apple universe of payment systems, and Apple was still charging 27% for payments that weren't on, it was charging a commission of 27%. And it's a complicated ruling, but I would be very careful because the FTC will come after